Hello there and welcome to this presentation on business budgeting. Setting and using a budget is a really useful tool to help you monitor and grow your business. It's not something that you should prepare just once a year and then leave it in a cupboard. It's an active tool that can help you keep on track and make sure that your actual sales and costs are in line with what you expect them to be. So the purpose of this video is to show you the basics of putting a budget together and also explain how it can be used in the real world. So what is a budget? As I said before, it's an active tool and it shows to you that your business is viable and that it can afford to pay your personal expenses. It really can't be stressed strongly enough how important a step having a budget is. Without it, you're effectively trading blind and merely hoping that you'll be successful, rather than making a solid plan that maximises your chance of succeeding. So how do we prepare a budget? The easiest way is what's called a bottom-up approach. It's called this because we start at the bottom of a traditional profit and loss account with owner's profit, and then add layer upon layer until we end up with the target income at the top. So the slide shows each of the steps that we need to consider. As I said, we start with your personal expenditure requirement. So this is the total sum of what you need in order to pay for your bills and survive, and any kind of profit element that you desire. And please remember, when calculating this figure, it must include everything in terms of personal expenditure. There really is no point in planning on making, say, £20,000 worth of profit for yourself if you need £25,000 to survive. Right. The next step then is to add on an allowance for tax. Now, the tax your business pays will largely depend on how you're set up, since limited companies are taxed in a different way to sole traders and partnerships. Whatever your structure is, you need to know what tax would be due in order to allow you to access the sum you need for your personal expenditure. Right, personal expenditure requirement plus tax equals the profit that your business needs to make. The next step then is to add the business running costs. So that's rent, business rates, electric and so on. Adding the running costs to the target net profit gives us the target gross profit. We can then work out, based on our standard profit margins, what our turnover needs to be. Right, let's look at this with some numbers. In this example, the owner has calculated that she needs £30,000 per year. Having spoke to her accountant, she learns that she needs to make an allowance of 25% of that amount to cover business and personal tax. That means that her business now needs to make £40,000. The next step, if you recall, was to add the running costs or overheads. In this example, the overheads come to £32,850. If we add that amount to the £40,000 profit, we get the target gross profit of £72,850. Now, the final step is to calculate the target turnover. This business operates on a gross profit margin of 60%, so we can use that information to work out that the business needs an annual turnover of £121,416. Does that make sense overall? I said that the budget is an active tool, so what can we do with it practically? Well, the first useful figure is our target monthly turnover, which we get by dividing the annual target turnover by 12. This gives the business owner an actual target to aim for. If actual turnover is less than the target, then we know we have a problem and we need to try and increase our sales. If target turnover is exceeded, then we know we're doing well. Either way, we'll know where we stand. Secondly, you can use the budget as a way of making sure that your costs aren't excessive. When you calculated your overheads, you would have looked at the previous year's or maybe 2 years' worth of costs, and this would have given you a really good idea of how much each line of expenditure was costing you. If actual costs turn out to be significantly higher, then there could be a problem with some of the supplier's invoices, or maybe some other problems exist. But this is a really good habit to get into, checking your supplier invoices against your budget before you pay them. Number 3 on the slide deals with what's probably one of the biggest causes of small business failure, and this is where the owner draws too much money out of the business. With a budget in place, you will know whether you've made your target profit, and also you will know how much you should be drawing each month. It's still your choice if you want to draw more, but you won't be able to complain that you don't understand why your business has run out of cash at some point in the future. Number 4 is perhaps most relevant for startup or young businesses. The budget allows you to decide whether your target turnover is realistic and therefore whether your business is viable. But the key thing is that this will happen in advance of you committing yourself to, say, a premises lease or spending money on equipment. And finally, number 5. If you've had a good couple of months, then you may wish to reward yourself by paying yourself a bonus, and you can do this safe in the knowledge that the business has the profit to pay you the bonus. So, in summary, a budget is your yearly plan that sets out everything that you're trying to achieve. It's useful as you can check your progress each month, and then you'll know whether you're on track or not. And it can also be used as a very good cost control tool. So that's it. As a final word, it's never too late to start preparing a budget, and this means even if you're partway through your year. You can really start enjoying the benefits of having a budget in place as soon as it's prepared. So don't delay, do it today. Once you have your budget in place, use it to monitor your progress. And as it says at the bottom of the slide, almost without exception, all successful businesses do this, so you really should do too. Right, that's all for now. Thanks for watching and good luck with your business.